Good evening, ladies and gentlemen. This is Clueless Day Trading Frank. It's approximately 8:03 p.m. on a very frigid evening here on the New Jersey-New York waterfront. It is January 22nd, 2019. Full disclosure, these sessions are purely for financial education and not for any solicitation or advice. Like I like to say, grow up and take responsibility for your own trading. What we offer here at Clueless Day Trading are some extremely precise GPS roadmaps for tactical traders. Try to keep the emotions away as much as possible. Try to read the signals on the market as much as possible, and specifically the technical hidden signals, not the obvious ones that everyone looks at. Because reading the hidden signals is what has created massive opportunities repeatedly that I've shown over the past couple of months, over the past couple of weeks, even over the past couple of days, and going forward, where you can take advantage of cheaper prices and sell at inflated prices. Isn't that what investing and trading is all about? So, saying all that, I'd like to remind everyone that these sessions are uploaded, these free sessions, free strategic market update webinars, what we call videocasts, are uploaded to the Google YouTube channel for Clueless Day Trading. Feel free to spread the word. The least all of you guys can do, ladies and gentlemen, can spread the word around for Clueless Day Trading. We always like new members. We always have, just like any other business, there's attrition. The weak hands drop out. The strong ones stay. They make money. They lose a little, and they make 3 times back more. So that's just the way the business works. As a trader, if you don't know how to lose, then you will never know the joys of winning. Period. That's just the way it is. If you think you're going to win on every single trade and on every day, well, then you're living in some fantasy land that you need to get the heck out of real fast. All right? So, secondly, I'd like everyone to follow us on the Instagram channel, which we use as a promotional marketing tool to show some of the highlights of our trading on Instagram. That's also on the Clueless Day Trading. If you do not have an Instagram account, just a simple request. It's not going to cost you any money because everyone's always watching their pockets, right? That's the way it is. And the pennies is just create an Instagram account and just follow us. Spread the word around. Doesn't cost you a penny. Helps the service out. And more importantly, spreads the word, gets new blood in, and we can share a lot of ideas from great members who also share some of their ideas in what we do. Some of them I highlight if they fall within the guidelines of what I'm looking at, as in technical guidelines, and of course some of them have also been great winners. On that note, let us begin. First of all, a couple of broader points on the market. Since the market bottomed on December 24th, what we call the Christmas Eve massacre, which I have said in my previous videos was a manipulated attack on U.S. financial markets, and I am not Alex Jones or some conspiracy theorist. I am telling you from a Wall Street perspective, as somebody who is a deep student of the market. I am what you call the deep state of the markets. Okay, how about that? So, saying all that, I do believe it was a coordinated attack on U.S. financial markets right before Christmas, and that was right here, day before Christmas, so around the 24th, right there. And then this is what happened. Markets are never linear. Markets are algorithmic, and along the way, I walk people through it, uptrend intact, all that good stuff, showed the technical, let's change this color, showed all the technical moves that had happened, and I was right, pretty much right on the ball where I said the markets would go. We are still not at full pattern completion. The full pattern completion for this intermediate stage of the rally is approximately around 2710. We almost got there. We got to that 2688 on the E-minis intraday, and this is where we are today. Technically, if you look at this chart, you don't need to be a rocket scientist. It is not broken. It is a consolidation wave. That's why we have these lines. Both flags look like this. The primary trend being up, and then they break out again. So if you just use a purely technical perspective, then this is a bull flag. The bull flag is intact as long as we hold the 2590 to 2600 level, this buffer zone here, or the DMZ, the demilitarized zone, right? Between North and South Korea. Some of you might know. So bottom line is, once we break that, then we have an open door to high probability move all the way down into the low 2500s. But till this buffer zone here, this DMZ zone is violated, then there is not going to be this move down. But the possibility is there. That's the reason why I have these charts drawn to close to absolute perfection. No question about it. No one can deny it. Because I don't tweak around the charts in the middle of the day just to fit my own purpose or what I said. These charts were drawn weeks ago. This rising wedge, for example, this ascending triangle, they were not drawn after the fact. So, as a tactical trader, it is your responsibility, it is your duty, and it's not really that hard, believe me, to manage your trades accordingly. When we ramped up 3,000 some points from December 24th all the way up to this close to the 2,700 level or so, and I walked people through it, through every one of these couple of 100-point drops. This was a couple of 100 points, everyone freaking out. And I showed multiple charts, multiple indicators, kept on watching the VIX on the other side, trying to read the signals and telling people, okay, we got to buy this because this is what it's looking like. These are the levels. If we fall below that, we need to get out. And we got there. Once we got at this congestion zone, because this is a supply zone, if you want to look at it that way. This is where a lot of selling came in. This is going all the way back to the 12th of December, 2018. And of course, the intermediate pattern completion is at this level here, which was, trying to remember the date. Oh, well, the date's down here, which was the first week in December, around the 7th of December, 2018. That would be according to my estimation on the short-term trading picture, a pattern completion. In other words, we are fully overbought at that level. We got close to it, not quite there yet, and now we're consolidating a bit. So the fact is that it is, as any trader should, is you need to catch these waves as they're moving higher. A rising wedge, I'm not going to get into the definition of a rising wedge. Please go to Investopedia or Google the definition. Basically, the range gets narrower and narrower. Then it broke loose, which looked fantastic, and we should have gone a little bit towards the 2,700 level today. We had a whole bunch of stuff that happened over the weekend, and we're going to go over some of the broader risks in the market, and which we already know, but I'd like to highlight some of the more important ones. And then we did this. So we fell about 450, 60, 70 points, can't remember the exact number, and we ended the day down 300. And that's what it looks like on a technical basis. So technical, just to keep it real simple here, as I keep on showing these charts and updating them real time, as you all know I do, and we did some fantastic short trades today. One was for 200% plus, the other one was for 550% plus, which is still rolling out there. These are hedges. You don't take your whole account and put them in there. If you want to, that's fine with me, because I ain't your daddy, so I'm not going to tell you what to do. But I'm saying you from a hedge standpoint, some of the longer positions that we're setting up. And then on the shorter side, the intraday, I showed the 264 puts expiring tomorrow at 264 puts at approximately $1 to $1.10. They went to $3.07. Did I hold it all the way to 3.7? No, because I didn't know it was going to go there. Because along the way, there were lots of little supports, and they kept on bouncing off. So I sold the first one around 100% plus, the next one around 200% plus, and the remainder a little bit more than, I'm sorry, the remainder was around that 175 to 200% plus. But most of them I had sold, as I showed out there. And you guys need to basically take control of your own trading stuff. You bought them at $1. Depending on how much money you put in, you got to double on your money. You better take it. But like I said, at 20% of the balance running, and those were generated at roughly about 200% plus. Then I rolled them out to a cheaper strike on the lower cent, just in case the market broke a little bit further, and it did. They basically went from a low, from the buy point of around 90 cents to $1. Those were the entries to $1.60. So I took a bunch of them out, left some of them in there. And they're playing with free money. Is it that easy? Never easy. There are some members who'd like to think that the market's like so predictable. Okay, if it's down, you just buy it. And no, it doesn't work like that. Like I'd like to point out to them, it never that simple. Because algorithmic high frequency trading programs are artificial, run on AI. So what does that mean? That means what the majority are doing at any given time, they will do the opposite, just for the heck of it. And the smart algos, there are dumb algos, there are smart algos, right? Just the way there are dumb traders, real dumb emotional traders. Not dumb, but they're just emotionally so like taken over. I call them dumb, obviously. Anytime you make a real emotional decision, it is dumb. No question about it in our lives and in trading. The fact is that there are dumb algos and there are very smart algos. The very smart algos are really mechanical. So they will look at a slew of data as to what traders are doing, because the traders are always looking at the same thing, same levels, same thing. They're never looking at the internals, whether something is severely oversold, whether the stochastics are starting to turn, whether you're starting to see the McClellan creating a positive divergence, all kinds of different things that I teach on my advanced coaching sessions. So if you want to learn about that, you got to sign up for it, okay? I give a lot of freebies out, but I can't give everything out for free. Got to pay a little bit for my time and pay the expenses of running the service. So bottom line is that the smart algos look at all that stuff and they say, okay, we're going to trap them. And they trap them because the shorts who went in at down 460 points got completely clobbered. They lost 60% in about 3 minutes. Why did that happen? Well, if you looked at my charts, you'd know. And anybody who has no idea what happened and they listen to this webinar, strategic webinar, highly suggest you spend about 15 minutes with a nice cold drink. And if you don't drink, then a nice cold non-alcoholic drink maybe, to sit down and go through my Twitter feed. It is a running commentary on what happened during the day in a very exciting format. And what's an exciting format? A visual format with some very incisive and accurate comments on what is going on. So what really happened today? The Trump team, they're playing games. They always play games, and just like any other bureaucratic organization. 1 minute they love the Chinese, other minute they don't like the Chinese. So markets were moving on that news. So this news that came out that there was over the weekend, Financial Times, and these papers again. Newspapers are newspapers. They're in the business of putting out news. Sometimes fake news, sometimes real news. Just the way it goes. Just the way all of us. Sometimes we lie, sometimes we speak the truth. Do you think we're normal? I mean, we're perfect? So neither is the media. You know, I'm not supporting anybody. I'm telling you the actual facts. If you think you're always truthful, then you're a bullshitter because you're not, right? So trading's the same way. So Financial Times ran an article saying over the weekend, apparently Trump administration wasn't happy with some of the stuff going on. Of course they're not happy with some of the stuff that's going on with the Chinese. That's the reason we're negotiating with them. Hello? Okay? So bottom line is this is the actual E-minis moving right now. They're up about 2.25, 3 points, and you can see how well they hug these lines. That's called accurate charting. What does that mean to you? That means you need to trade these charts. Really as simple as that. So going back to the original thing, the market was running on that news. Oh my God! Now they don't want to have the Chinese guys over here. They don't want to meet the big kahunas. The vice premier Li Hua. I think that's how you pronounce it, right? Because I murdered his name last time. And President Trump might not is not going to Davos, so he's obviously not meeting Xi unless the government opens. He might just tweet out and say, "I'm going to Davos." Well, too late because Davos is already happening. So bottom line is that he's not going there, and then there was some. So those fake rumors started coming out, right? So markets dropped, boom, 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 boom. All right. So you made money on the SPY puts. What's wrong with that? Setting up some long trades, down on a few of them. Nothing too crazy, because a lot of profits were taken last week. No question about it. Because we were buying the market all the way from December 24th and staggering our profits up. So any real emotional guy who went really hog wild right at the end, well, you deserve to be punished. You know, really straightforward talk here. All right? Because nobody's ever around when the markets are dirt cheap, which was right before Christmas and even after Christmas. Nobody's around. Then they all kind of seep in, which is good. That's human behavior, right? Things start to get a little bit warm. So everybody starts to come in here. Okay, great. They love these big moves. First of all, they missed out on this entire move from here all the way from, this was 8th of January, but going back to the 24th. Let's call it the 26th of December when the rally really started. 24th, nobody touched the market. We did. We bought a little bit because the signals on the internals were telling us that we're going to be a pretty sharp reflex bounce, whether it was a dead cat bounce or not, that was going to happen. And it happened. So the media didn't really catch up that the markets were rallying 3,000 points, and neither did many of you because you guys weren't comfortable. Because you go like comfort, right? Well, I come from I don't come from the streets. I come from a nice middle-class medical family. Both my parents were doctors, God bless their soul. But you know what? I wasn't handed down too much stuff. I worked for what I did, whether on Wall Street or otherwise. So some of you might be a little too comfortable with what you're doing, right? And you want to buy when you're comfortable. Well, you're not going to survive in this business. That's it. That's the nature of life and it's the nature of trading. You got to buy discomfort within reason. So by the time you feel comfortable, this is what happened. This was basically stage 5 of this short-term move. So then we're going into a consolidation wave today. Big frigging deal. What's so great about it? I mean, what's so wrong with it? I showed multiple charts showing no technical damage whatsoever on the longer term charts, that are the dailies and the weeklies and the monthlies. Really none. On the hourly, of course. On the 15-minute, of course. So I can't teach this stuff, man. You guys gotta do it yourselves. All right? And it's been going on for years. Same old panic, same old stuff, blah, 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 blah. Now, do I think the market's going to overshoot, go to 2,800, 2,900? I have absolutely no idea. All I know, we haven't completed the complete pattern yet, and we have room to move that we're going to go through tonight. So going back to today, so all the news comes out, market falls, and then Larry Kudlow comes out at 3:30, which I knew he was going to say. I almost read in his mind that he was going to say, well, no, that's actually untrue. He said it was untrue. Guess what happens? The markets jump 150 points in 3 minutes. You think you're that fast enough to trade that? No. You need to set up prior to that, like we did. We were taking some nice profits off that. I told you guys to do it on the short side. And then I was saying to buy some of the things. Boom. These NVIDIAs and Netflixes, which were down 3, 4, 5%, they gained 1% real fast. That's $2-3. We bought the Amazon calls at the 1720 calls when the stock was at 1,600 and when the stock was at, I'm going to change the screen here so you don't get bored looking at this. So we bought I alerted out, was looking at my charts on my quad charts, and I'm looking at this thing here. And remember, volatility is intense when days like today happen. Is this the first day things like today happen? No. It's like the 100,000 times that days like today happen. But every time it seems like to a lot of you, it's so new. Well, it ain't new. Embrace volatility or simply perish. Don't expect to make real money in the markets if you don't know how to handle volatility. And if you don't know how to set up cheaper prices, if you're a long trader. And if you're a short trader, I showed some fantastic short trades on the SPYs today. 200%, 50% on the next one. More than that. So, bottom line is, and that's intraday, ladies and gentlemen. It's not like over 5 days. Go tell your grandpa that you made 200% on a trade that went from 1 to 3 and he thinks you're smoking crack. All right? Or some other banned substance you shouldn't be. But that's what option traders do. So Amazon was down to 1610. Stock closed at 1640. That's 30 freaking points. Happens almost every day. But you got to catch close to the bottom. So the calls were bought at around $2.40. The low for the calls were 2. These were the 1720 calls. Please check the Twitter feed. They closed at $3.70. Or $3.75 on the ask. So do the math. That's good for 45% on your money. Just within a matter of 15, 20, 30 minutes. End of story. Just want to highlight a point. So, saying all that, my readings, and again, I am forecasting extreme volatility. I'm forecasting extreme powerful markets that are moving hundreds of points within hours. And I am still, from a guidance standpoint, nailing it. I'm not, I'm not sitting here stroking my back like, oh yeah, that's right, I am telling you the truth. I am still nailing it on forecast. What you guys are doing with that information is up to you all. So my take is that what we saw today, at least on a technical standpoint, did not, on multiple technical charts, do any damage, material damage, to the intermediate term wave we're going through, which is going to go into the end of the month towards the first week in February. So let's look at the charts. So on the daily, this is what we saw. Remember, I'm zooming in here. I'm not going all the way up. I'm just zooming in to what I think is going to be a cycle high, which is approximately, if we get the China deal, we are going to hit 2792, 2800 on the S&P 500 so fast your head's going to spin, just the way your head spun when the market took off like this and then dropped 300 points one day, similar to this pattern symmetry, and then boom, bull flag, little consolidation, boom, breakout, little consolidation. So far, we have major support at the 3450, which are about to cross. You don't know the power of what a 3450 cross is all about? Well, I ain't going to explain it right now. Again, sign up for the advanced coaching session. I'll tell you everything about the 3450 cross. In fact, I've mentioned it in my free strategic webinars quite a few times. It is a very powerful signal as far as I've seen it over many, many years. I don't give a hoot what other people say. At this point, it's merging. You can see here very clearly. And like I said, always trade with eyes and brains wide open. You don't want your split brain, like your skull opened up, but you need to have your brains open, as in absorbing everything around you. Remember, this is war. This is tactical warfare. All right? And I'm no gamer. I'll tell you that. I suck at gaming. I used to only play flying games and tank games. I don't like first shooter games. I don't give a crap about that stuff. All right? But my point is that, and I like racing games, car racing games. And so bottom line is, as in video games. But this you gotta really zone in what you're looking at. Forget this arrow. This arrow shows closely trading charts. We're dead right on the ball. So saying all that, at this point, we are looking at, and this is important. This is really important. This dotted line is simply tracking the price of the 50-day moving average. This dotted line here, price line is a price level is tracking the 34-day moving average. It doesn't take a rocket scientist to figure out that they are attempting to cross over. Once the 34 crosses over the 50, you get a sharp lift on the markets again. The mid-Bollinger, which is shown here, and you can, by the way, you guys have charts. You can put the same indicators and look at it yourself. The mid-Bollinger is sharply sloping higher. The lower Bollinger is sharply sloping higher. The power of Bollingers, again, is very important. And many people don't quite understand it. There are certain traders old-fashioned traders who just trade off Bollinger Bands. You know that? Because Bollinger Bands are like waves. Look at this wave. There you go. And the waves are telling you there is a possible major trend change about to happen in the market. You know what I say to that? I don't frigging care if it's a trend change or a non-trend change. All I know is that I am trading the overall candle structure. I am trading levels. I am trading patterns, and specifically candlestick patterns. And I can see that the full pattern completion is around 2800. That's asking quite a bit because we are sitting here at in the mid 2600s, right? That's 150 points higher from here on the E-mini handles. That means another 1,000 points on the Dow. Is it possible? Yeah. A makeshift China deal, we get 1,000 points within 48 hours, within a day. We got 1,000 points here in a day after I told people to buy the market before on Christmas Eve, the Christmas Eve massacre. I said, let's add the stuff. Go through my Twitter feed. You'll see it. This was the 25th. Futures kept on trading, overseas, Globex futures, and this was the 26th. That was a 1,000-point rally. Some of us were in there. 99% of you weren't even there. So, what gives? The key is that at this point, you can see the waves flowing up. Just move your head a little softly, Don't smoke any weird stuff. Just like look at it, and your eyes are going to get all big and you're going to get all dizzy, right? But the Bollingers are, I'm half kidding, okay? So Bollinger are moving higher. There's a lot of flow, and the flow is telling you that the markets want to go higher for now. Not higher, like we're going to make a new high. I have no idea. Yes, I can show you a longer term chart. There's a possibility, but that's dependent on multiple macroeconomic factors that you and me have no control about. There are multiple Trump tweets, multiple stuff coming out of the trade team, whether it's Peter Navarro or Larry Kudlow or Mnuchin or Ambassador Lighthouser, the main trade negotiator, or some Chinese premier. We don't control all that stuff, and they can change the patterns on the technicals within seconds. But we at least know what our downsides are. But at least for now, the waves are higher. Now, many of you, in fact, majority of you, are still living in bunkers. I know I keep on saying that, but I know. They're always scared that we might just drop another 1,000 points. Sure, it can happen. We might also drop dead tomorrow by the time you wake up for trading. Sure, it happens, right? But is that how you live your life? Well, I'm not here to be Tony Robbins, but I'm just telling you what I see. So at this point in time, we have major support here, and if we do get a crossover, that's a very powerful signal. And remember, crossovers don't happen till we are up 2,500 points from here to here. This was the last of the 500 points before we had a consolidation move, which scared the living daylights out of most of you. What's so wrong about a massive move and then a bull flag? It's like a horse, like, right? A stallion. And then a breakout again to go towards attacking the downtrend line, which is in that 2720 level, and possibly, and if it breaks out above that, this is the ultimate bear kill zone, which basically completes the intermediate pattern in a big way at 2800 S&P and E-minis. But every time, and as I've taught all my ACS students, we get this consolidation channel. Everyone freaks out. It's okay. I can't change that. Fear is endemic. Confidence is something you work through. Okay? Fear is a reaction. So, what's the word? I forget the code. But tactical trading brings confidence, and that is a strength. That is something that you go to work out and you build your muscle. So that's confidence. Tactical muscle is confidence. Fear is something you deal with every day. And in trading, if you deal with it every day, you ain't getting anywhere. And you know that too. I told one of my favorite members, if you're, especially the smaller the account, is not up to 300% since December 24th, then you're doing something wrong. Larger accounts through 300%, different story, because that means you're taking heavy risk. But smaller accounts, growing 2-3% or 100, 200, 300% since this bottom, and even since here, where multiple chances were given, even today, multiple chances were given. And if you haven't done that and you're still up like 40% from here, then you're doing something so frigging wrong, it's not even funny. DM me. I'll try to help you as much as possible. But if you think you're happy with 20, 30, 40% after a 3,000 point move on the market plus, then something is really wrong with you mentally, and you should really recalibrate how you're trading and what you want to really successfully achieve as a trader. If you don't question yourself on that, there's something really wrong with you. Because what's happening is fear has taken over so much because of the traumatic situation here, multiple 100 point moves up and down, but mostly down if you look at back in hindsight, that you are right now just frozen in time as the markets continue its move forward. So as a tactical trader, if you're doing that, you're just putting a gun to your head, and whatever you're not making is what you're losing. Write that down, stick it on your head. If your account is not a double, at least from June 24th or more, overall account, you're doing something extremely wrong. And I'm not saying just putting in everything, because if you put in everything down here, your account would be up 800%. Yeah. Think. Stop making excuses to yourself. All right. So at this point, nothing wrong in this picture. That's the daily. I'm not going to get into the nitty-gritty of it. Want to know how the mechanics of each one of these patterns work? Sign up for the advanced coaching session. Period. End of story. This is where we are. Here's your big downtrend line. That downtrend line is somewhere around the 27, low 2700s. We break out of that. The ultimate bear kill zone, which is the ultimate short squeeze, takes you to 2800, and you can very nicely short the market at that time. Even this little short that we did today generated 200% and 50% on the next trade. End of story. Let's look at the weeklies. The weekly chart. Oh, this is the SPY. That was the E-minis, and this is the SPYs. So, bottom line is, this is what we're monitoring. We have the stochastics here, which got very overbought around the 100 level, but it still seems to be moving sideways above the 80 mark. It falls below the 80 mark. That means we're going to break below the mid-Bollinger, below the 50. I'm sorry, this is actually the 10 EMA cross. Is that the VWAP? Oh, that's the VWAP. Sorry, don't worry about that. So if we break below the 261 level and the 260 level, obviously at that point we are going to be touching the 255. That's quite a bit of a drop, even though the trend doesn't change, because this is the uptrending mid-Bollinger line. Again, not rocket science. This is all visual trading. This one drop, if you're bullish, reminds me of this. That happened. This was the Christmas Eve. Sorry, this was not Christmas Eve. This was the 3rd of January. Everyone freaked out. This reminds me of this, just from a pattern symmetry standpoint. And what happened after that? This happened. Don't want to stick it in, but 99% of you just sat there, did nothing. So it doesn't matter how many chances markets give you to buy beautiful prices. People who are stuck in the dungeon of fear and constant analysis paralysis will never take advantage of it. Whether it be any stock, whether it be Netflix, whether it be Square, or any one of them. And not all of them move in tandem, right? We know that. But prices can be delivered at the rock bottom prices like it was, and no one touched the market. Most people didn't. I know it. And the few who did, they're the ones who throw out those big member feedbacks, because they're rolling. Or at least rolling for a couple of days. Making some real good money. And the rest of them, all dead quiet. But that's fine. That's human nature. But don't keep on repeating the same stupidity over and over again. Now, saying all that, this reminds me of what happened here. And I think we have another leg, which should take us towards that 269, 272 level, which has massive supply going back all the way to the 8th of October of last year, right? There's your downtrend line. This is not hard to read, guys. And that's at the 272 level. Massive supply. So downtrend lines are not that easy to break. So that is your daily on the SPYs. Right there. I have a nice sell point here because this was a big sell zone. That's at 270. And then forget this one. And then the downtrend line here at 270. Well, you guys can read it. 273. 273. And again, investing.com is free. Put your email, replicate these charts, draw your own lines, try to fit them into with my lines, which are right most of the time. And then we go from there. Now, this is a very clean one. This is the Gann chart, the Gann fans. Want to know what a Gann is? Then why don't you just look it up on Investopedia, because I'm not going to explain it. So saying all that, just look at the pattern. This overall looks like a rising wedge. We got a minor consolidation today. Still a bull flag over 2606 on the SPX. This is the actual SPX. Bear with me. This is what I used to call in the old days the galloping horse pattern. No one buys here, the lows. Nobody. They all try to crowd in here. Even then, they're shit scared. And so what happens, excuse my French, my New York French, as in the S word, they sell way too quick. They never really make any real money. And then this happens. Now they're really freaked out. Like, oh my God. Okay. So if this is the primary trend is still up. You can clearly see it. I want to really simplify this session. Don't want to get into the nitty gritty and the hardcore stuff. So the primary trend is still up. And as long as we hold the 2600 level or the 2606 level, you can see that we are going to bounce. If we break below that, then we have 2562 and the Gann downtrend line here, and this is Gann 1, fan 1, comes into play, 2562. Now, if you think it's that easy that we break 2600 and we hit 2562 that fast, 40 handles or roughly 300 points again on the Dow immediately, then you are totally wrong. It doesn't work like that. Because along the way, there are multiple support levels here that are going to be hit. They will try to bounce it, and then we shall see. Remember, I have no internals here. I am simply showing you the external pattern of a classic technical view. So at this point, uptrend is still intact. This was the 50 fib and the 50 Gann level. The midline, I should say, the midline, and we basically fell below the midline, and then we created a minor hammer. You can see that. Remember, markets are always highly manipulated. Now they're technically manipulated. Why is that we went up to that level that I showed when the markets were down here? I said we were going to come into this zone here, which we almost did, dead right. And why is that Larry Kudlow has to make a comment at 3:30? Why is that a Trump tweet has to come out at a specific level in the market, which is a major supply zone or a major demand zone or buy zone? You ever think about that? Markets are totally manipulated. I don't give a hoot if it's Donald, as in Donald from New York City, our boy Donald, or whether it's somebody else. They're always playing around with the markets. They're all manipulating the markets, in my opinion, because you'll notice that at certain specific technical levels, there's always some news coming out. It's always like around 3:30 or right after the market, you'll have breaking news, or at 10 o'clock or at 12. It's all hogwash, but it's manipulation, complete market manipulation. And he comes out and says, oh, everything's going great with the Chinese market, jump up 300 points. Technically, that's what we call the Trump bump, right? I showed that. And we came back and tested that of the Trump bump today. Isn't that manipulation? Donald is the master, in my opinion, with his tweets, of manipulating the market. Hopefully he manipulates it higher instead of lower, because he's also very scared. He doesn't want the market to go down. Okay? So bottom line is that just the way it is. Accept it, all right? So we try to play the technical so we can be aware. I mean, we can be cognizant of the levels the markets can come down to, just in case they go into a what other people think random free fall, but we call it structured volatility, right? Exactly. So saying all that, don't worry about all this stuff, bars and all that. So this is looking fine for now. And I'm going to be monitoring this level. We come close to breaking, if this red candle keeps on expanding lower, then obviously you want to lower your long exposure. I don't care what stock it is, not maybe the specialized situations, which actually one of them really slapped us today, which was Arconic, which I still think, by the way, and mark my words, the reason the board rejected the idea, they thought the $22 price target, buyout price that Apollo Management, private equity firm, gave was not good enough. Maybe they have some other suitors. Who knows? But there was a lot of buying. I showed some very specific chart on Arconic, which showed a fat green doji. That means they were all buyers. Arbitrage going on with the short covering, because I'm sure some hedge fund out there knew Apollo was going to not, that the board was going to reject it, but it still looks okay for 20. They're damn cheap. I bought them at 15 cents, 16 cents, 18 cents, 20 cents. I'll leave them till February. If they get another suitor to buy the company at 20, well, a part of the company, Arconic, then those things are going to be $1. They're going to be 500% on your money. It's happened before. That's the joy of paying extreme lottos. Just buy a bunch and just leave it in there. So let's stick to this here. This is looking fine. There's nothing wrong in the picture here. What gets wrong is if we start to see this expanding and expanding towards the 26.0 level, 006 level, that means we're going to be coming down here. But aside from that, if we reclaim the green line here, which is the midpoint of the GAN, is this the midpoint? That's the midpoint right there. This is preset. This is my line. This is preset. I can move that. So right there, that 26.44. If we break out over 26.44, we are back into the uptrend. You get a short squeeze back into the zone, which is a major supply zone. So you want to be a seller. If we get some sort of notion of, again, some of these positive Trump tweets coming out on China trade and stuff like that, Larry Kudlow speaks it up more, talks it up more, then we're going to move like this fast. The next GAN level comes into play here at low 2700. This is not rocket science, guys. All right? That's it. Next one is your weekly. Now, this is a weekly chart that goes back, ladies and gentlemen, to September, July of 2016. Right there. 2015, right? So this is a longer term chart. So when you notice the longer term chart, this keeps you in the game. You got to look at it and just, what's your first look? Whatever your first impression is going to be the right one. I know it sounds simplistic, but it's true. Especially when you're zooming out to look at a weekly chart that goes back and encompasses time periods of 2016, 2015. This is 2016. This was elections. And this is where we are. What's the first thing that looks at you? Now, an ultimate dogmatic bear who's always thinking that the U.S. should be at the bottom of the pile and that the U.S. economy should be finished and all that garbage, you know my thoughts on that, then those guys are going to say, no, this is a really bad-looking chart. In reality, the truth is, it's not. So we are at a major inflection point here, and that has to do with China trade. The government shutdown, it's very important. It's getting to a level here because it's getting intolerable, and Wall Street is going to start taking notice. And remember, money talks, and like we said in New York, shit walks. And it's just in New York, not in New York, anywhere you stay. I don't care if you stay in, Boontown in the middle of wherever. The fact is, money talks, and the rest of it means nothing. So the fact is that if it's starting to affect the real economy, which is still not, then it's not going to be good. So looking at this, your first impression looks okay. Doesn't look okay, meaning it's going to go all the way up here, but it looks okay, meaning it's attempting that the uptrend is still intact. And this level here is a major resistance zone, the 2689. Remember, these are E-mini futures. So 2689 means 2692, 2695 on the S&P. Now, if you're that scared every morning and you can't read this swing chart because you're just absolutely blinded by fear because the markets are down 50 points and the stock you're in is down 3 points, then I am sorry to say you will not go anywhere. Because this is not a bad looking chart. This is a major resistance level. So obviously there's going to be some back and forth. That's exactly what happened today. This was an inside day. It's a bull flag. You went up 4 marching soldiers, 1, 2, 3, 4, and you gave back a little bit within this channel, within this uptrend line. You gave back this little bit. I know most of you were not here. Most of you are not here. Most of you started getting excited here. Understood. Don't agree with it, but understood. I know how the human mind works, and at least how retail traders operate. You start to feel a little bit comfortable here, and boom, the market snapped you. Told you that weeks ago that this was going to happen. This is a weekly chart. First week, nobody around. Second week, kind of nibbling. Third week, yeah, oh my God, markets are way too high. Fourth week, yeah, you're like, oh yeah, markets are definitely going higher. So you put a little bit more in, boom, little smack on a Tuesday. Now you're back in your cave again. Is that the way to trade? Seriously, is that the way to trade? Is that the height of stupidity? Emotional stupidity? Yeah, I think so. And if you ask yourself, that little voice in your head, which is the sane voice, will tell you, yeah, it's the height of stupidity. Nothing happened on the weekly charts, technically speaking. So bottom line is, if you look at this chart here, and I don't draw these charts just to please myself. I do this so it can help all of you, ladies and gentlemen. So it can help me stay focused. So even though if I don't feel good on a certain day, I don't care because I'm used to not feeling good. Okay? And when I don't feel good and I do the right things is when it rewards me the most in the markets and in life. Do something that is uncomfortable. Because by the time I'm so tired of hearing that people like to, I want to see something really certain before it happens. Like, what the heck are you talking about? Technically, there's a lot of certainty going on. Emotionally, maybe not. So, anyway, let me just there. So here was your downtrend line, this one, a big one from January 29th of 2018, right there. Read the charts. So we went above that, looked great, we bumped head. I mean, these charts can't get any better. I'm dead serious, and because the only time I really look at them this carefully is when I'm doing these strategic webinars or teaching somebody. Otherwise, I'm just glancing through it because I'm the one who's drawn it, so I know what I'm looking at. But look how amazingly accurate they are right there. And then it pulled back, and now it's creating another little rocket ship within the body of this candle, which is a very nice inside day. Technicals are looking pretty damn good to me on the weekly because we're about to have a crossover of the MACD. I'm sorry, of the the 26.9, the MACD lines, and the histogram is about to go positive. That's why I draw this line, to draw your attention. Remember, a 10-year-old with no trading baggage in their head, less analysis paralysis like most of you guys and gals, can probably be a better trader than all of you put together. Can probably be a better trader than me sometimes. Because if you look at this very carefully, just look carefully, just look at it. The histograms are shrinking sharp. And they're going to go positive. That's generally what happens. That means we will most probably hit this big supply zone here, somewhere around 2687. We closed at 2632. That's 50 times 6. That's another 300 points. If you don't know how to trade 300 points on the Dow, I can help you. Now, if we do break out of this zone here, then we know that's the upper level, 2800. I'm not even going there. I'm looking to see where we can go over the short term. So far, looking good. The stochastics buckled a little bit, but they still do not get overbought till they get here. That means you buy the tactical dips as long as the levels are holding and as long as the pattern's holding. That's it. That's your weekly. Looking pretty damn good. Look at the monthly. The monthly I've explained very, very carefully. I have explained in detail multiple times, explained very quickly. Now, we have a monthly crossover on the stows. Hallelujah. Okay? Why don't you do a little backflip? Because anyone with a longer term picture on the markets, slightly longer term, intermediate to longer term picture in the markets, should be super duper excited to see a stochastic crossover on the monthly. Now, this was the 2018 break-even level. I wrote it in plain English. I'm sure you guys speak English. Okay, 2664. Guess what? We hit that. And then we pulled back. And the body of the candle is still pretty bright green. This body of the candle starts to turn red, or this tail here rejected as it's trying to cross over into this macro uptrend channel, which is huge. This is a macro uptrend channel that started on the 1st of February 2016 and the 1st of January 2016. Right there, right there. Now, please focus. Look at that. That's a macro acceleration channel. Big moves, 2016, 2018. Then came the massive volatility. We still held that channel. We finally gave below that channel that for 1 week, and that was in December. We broke below that. So now we are attempting, and I like to keep this real simple, guys. We're attempting to go back into this macro channel that we had constructed and built on the power of the US economy since 2016. If we entered that, we are back into the zone. We will hit highs. I shouldn't say we will. Higher probability we will test the highs. But in the meantime, at the 2018 break-even level and at that juncture where you cannot cross into the promised land, which is this channel here, you're going to find some heavy resistance and heavy volatility. That's where we are at right now. And I've been talking about this for quite a few weeks now. This is good. Very simplistic. As long as the stows keep on trending higher and the crossover remains, whatever volatility, remember, this is a monthly candle. This is for the full month of January. The money that went into the market at the end of December stayed in there, despite these fluctuations that we see. Now, as options traders, we feel the fluctuations more because things move faster, up and down. So we know that. But I'm just showing you the picture where you don't bail every single time you are supposed to dollar cost average. You're selling, and then you're chasing higher prices. Is that a brilliant move? I don't think so. Doesn't work for you. So why do you keep on doing that? Going after every stop, getting out, then paying a higher price to get into it, and saying, and then you get lucky because we're down day today, and you say, "Oh, I was right because the markets went down." Big frigging deal. Technical traders look at the market in a completely different way than an emotional trader. An emotional trader feels like, "Oh, wow, look, I didn't get in. Now I saved all that money." Except they never ask themselves a simple question. How much money did they lose on the table by not buying a massive 3,000 plus point reversal on the market since June 24th? They'll never ask themselves that. That's the reason, just like politicians, humans, and traders are liars. We lie to ourselves. We are hypocrites. And then we criticize others for being hypocrites. How pathetic is that? So, stop being a hypocrite. Acknowledge your faults. This is how I tell myself. This is how I look at myself. Acknowledge your faults, what you're doing wrong. Take some risks. Look at the longer term charts. Play the short term trades. Hey, there's enough short term trades to play. You want to close your book out every single day? Sure, do it. But this is looking pretty damn good. Now, do I think we're going to bust a move into this? It depends, but I do believe that we have a good shot to get towards the 2,700 level. So 2,700, because that's right there, the downtrend line, right there. And that's the next juncture of re-entry into this upper trend, macro trend. By the time we enter this macro trend, this move is going to be very fast and quick. And that's where you're going to see some jubilation again by the talking heads on the media and the talking heads in your head. So there is no discomfort here. They're just technical opportunities. Nothing happened today to damage the markets. Futures are up 9.5 right now. So that means, let's look at it. This is where we are. If anybody comes and tells me, Frank, you're a really stupid guy, I'll say yes. My wife also calls me stupid sometimes. In life, maybe sometimes, because I'm kind of simple sometimes. Even though I'm a hard nut guy, sometimes, I'm stupid. But when it comes to market charting and stuff, I am not. And you can see that in full action right now in front of you. This is what's going on. This is what the markets are going to be probably at the open tomorrow. Everything else that happens, which freaks the heck out of you guys because you guys don't track my charts or at least act on it, I don't need to hear accolades how great my charts are. No, I don't need to. I need you guys to apply them in your trading and make money. Okay? And that's it. So the real stupids might be hiding in the retail emotional crowd other than me. Because any of you who completely dumped out, you're going to miss out again. This is a short-term chart telling you that here's the uptrend line from the 17th of January. That was last week, just in case you all forgot. 2675. That's where we went. This is what's going on, ladies and gentlemen. This was the Trump bump that started. The big move. Things just went boom. We took a nice amount of profits out, left some in there. Then we got another big accelerated move. I've always said, remember this, because I've seen it. I don't just make up things, is when you get an impulse move, these are impulse moves. Why? Because the shorts got completely trapped. You normally get a consolidation move which will come back and retest to make sure that that's where the support level is. In simple English, the market's a friggin' manipulated beast. They want to take their money back. So the shorts who got clobbered here, they got their money back today. The institutional shorts. And now this is where we are. Futures up 9. Now, anything can go wrong. We could break 2617. There could be a tweet coming out of Donald at like 1 at night or 6 in the morning, because I think he does get some sleep. He's really pissed off with the Chinese. We'll be here real fast. Those things are always there. We have to live with risk. But looking at a technical side, this impulse move, impulse wave, through this nice consolidation channel was met, retested. And those are your 15-minute charts. This is your 1 hour charts. This is your 15. This is your hourly, which basically showed no signs of any damage, real damage whatsoever. That's it, guys. Any quick questions I can answer? Please feel free to ask. And don't please ask me, oh, do you think Tesla's going to be at 305 tomorrow? I'm going to say, yeah, it will be. You want tactical charts and track my tactical trades on 5, 10, 15-point moves. But don't ask me, especially in this type of environment, that whether or not a stock is going to be up $10 tomorrow. Because I already show stocks that are up $10, $15, $20 right from the lows before the market turned. I've already shown that. There are certain special situations where the stocks don't carry with the market, like the Amarins, like the Clovis and things like that. Chipotle just going its own merry way. That's it. So any quick questions, please? None? Great. I am free to go. I'll see you guys tomorrow. Everything that I said is WOW. Okay, wow. Words of wisdom. Trust me, from real hardcore experience. Got to learn how to trade the charts. It's not that easy, but it's not that hard. Just sign up for the advanced coaching sessions. If you're that much of a penny pincher that you can't spare a couple of bucks to enhance your profits and your trading, well, then in that case, just focus on my real-time Twitter feed as a member, focus on these webinars, and keep doing what you need to do. On that note, God bless you all. Armageddon has been postponed for probably another week, 10 days. I'm being sarcastic. We are technically, nothing went wrong today. It was a quick, sharp consolidation. I'm always watching for any type of real negative catalyst which will change the patterns. I haven't seen that yet, but this, if it starts expanding, as you know, anything below the 260, 133 level, that's why I do these charts, so you can see these roadmaps. That means we're getting into some real hot water. Let's see what happens. Have a blessed evening. Stay warm, and thank you for being here. Good night.